Hey everyone, it's our monthly crypto coaching call, and it's been quite an interesting month, at least in my perspective. We're going to go over some charts. We're going to talk a little about the merge. I posted a video already about this, so if you haven't watched it, please go, and if you have any questions, of course, we can discuss them in chat. We're going to cover in this call specifically what is my plan also for the merge and how I'm planning to trade Ethereum. Also, we're going to go over one of my recent trades, the short that I entered on Vulcan Forge. And yeah, that's pretty much it. I don't think there has been any major news in the past month or so. I think the merge is probably the one that everyone is talking about. Of course, we had this type of news from the Fed that they kind of scared the markets, a week ago or so. They were quite hawkish in their last comments, which was complete contradiction to the last time that the Fed spoke publicly, and Chairman Powell said some stuff that really spooked the markets, and that's why we've seen quite a sell-off, I would say, and Bitcoin pretty much broke out of this pattern that we were looking at, and this support level here around 24K. Also retested the 100-day moving average, but failed to break it. And this was also it contradicted also with, not contradicted, but it kind of fell at the same time also during the second speech of Powell, where he was a lot more hawkish. So right now, I think we're definitely in a confirmed bear market, and there's no any kind of hope in sight that we might get into a bull market. If when we were right here somewhere, I was still leaning towards the bear, and so but we couldn't have ignored the bullish scenario where we break somewhere around here, and we have something like this to the upside. It was, I think, still on the table, and although it was like lower probability, but now I think we're pretty much in the depths of the bear market. And for me, the main question is if we're gonna have a capitulation. So this is scenario number one. If we're gonna have a really fast washout here from this area around 20K, as you can see, 20K is holding right now as resistance, but this entire area around 19K, I think is quite significant support. And if we break down, are we going to see like something fast like this, big candles to the downside? Or are we going to continue seeing the slow bleeds that we're seeing in the past several weeks? Or potentially scenario number two that I'm seeing currently is that this entire range right here between, this range between 20K and 28K, 30K turns into a massive accumulation range for Bitcoin. I wouldn't be surprised in any of the scenarios, to be honest. I'm not sure which one I would prefer, but this is how I'm planning to trade both of them. So as you know, I have my short that I opened here on the break of 22K. I'm still holding it. I haven't taken profit. My idea here was to hedge, obviously, my Bitcoin holdings without having to sell them. That I think is I would say a valid strategy in a bear market, because if, for example, you're storing your Bitcoin somewhere safe and it's on a ledger and you have to transfer it to an exchange and then sell it and then pay the tax on the amount, because if you've hold this for long enough, you might have a pretty significant tax bill when it comes to selling it. I didn't want to do this. I want to hold my Bitcoin for the long term, and that's why I decided to open this hedge. I was feeling quite confident because of the technical setup too, but also I'm confident with the chop here. If we don't break down, I'm okay to hold this through some chop in this area. For example, something like this, yeah, I would have a stop loss probably somewhere around the 100-day moving average if we really go crazy to the upside. But generally, I'm okay with holding through this chop. And of course, if we start breaking below this level, I said my plan is to take some profit somewhere around here. And then if we continue breaking down, or if there's a new setup for a short, I could definitely take it, because the first scenario that we just mentioned is that I'm looking for a quick washout. So if we get this scenario, somewhere around here, we get like volume fading, and very small candles. This means that price is gathering momentum. And at some point, we might get a fast washout to the downside. Where we're going to get, nobody knows, right? The key level that I'm looking for is somewhere around 12, 13K. But I think this could be a crowded trade. So definitely I wouldn't be wait to buy Bitcoin just here or to take profits on my short. In this entire area, I will be taking profit on the short, and also I would be buying Bitcoin. So if we get a fast washout, I'll definitely try to buy as low as possible. But also in this entire area, I think it's a pretty good place to start really accumulating. And this is my plan for scenario number one. Just start DCAing into this area. Every single month I'm planning to start buying some Bitcoin, because we never know where the bottom will be. And I pretty much feel comfortable to buy Bitcoin and hold it for the long term in this area. And if it decides to go lower, then I would just go heavier. I think this is the area that everyone's looking at, around 14K. 12K, 14K. But even if we go lower, I'm ready to buy more. But if we get into this zone and we start chopping around, I'll definitely start DCing, and obviously look for potential setups if there are any to take advantage of. So this is my plan for scenario number one. If we get like the accumulation play here, so if we never get to the downside, because as I mentioned, this could be a crowded trade. If we chop around in this area for probably years, Bitcoin could accumulate. That's fine with me. I'm fine with holding through my positions in these conditions. I'm also okay with patiently waiting for this price action to develop. And if at some point we get something like this, so we get a breakout above this area, this is where I would start hunting for a breakout on Bitcoin, and most probably we'll go in heavier. And if we start seeing this being confirmed as accumulation, so even from where we are right now, if we get another touch and we get a bounce from here, and then we get another touch somewhere around here and get a bounce from here, I could start considering taking also a little bit more, not taking, but buying more Bitcoin on accumulation here. So if this confirms that this is the accumulation, I'm fine also with taking some positions somewhere in this lower area around 20K. Again, if we start confirming this as an accumulation. Again, this is not 100% certain that will happen, because it might play out like something like this. Let me just zoom in to this area. So as you can see here, it started looking like an accumulation, and then we had the washout. This was like several months later. So that's why I'm saying I want to be patient. But even if we have similar thing and we then get a washout after, let's say, 6 months, and I've started buying Bitcoin in this here accumulation that was forming, and then we get something like this, again, I will be still buying Bitcoin, and I will just bring my cost average down from these buys here. But here, definitely in this area, if we don't really wash out, I will be going a little bit lighter. So this in the lower part of the range, I will be more confident here with my size. And here in this part, I would be a little bit more conservative, but then I could go a little bit more heavy on the breakout when it's confirmed that this could be a continuation and a new bull cycle for Bitcoin. So these are the two main scenarios I'm currently looking at. And of course, the short here will help me kind of make the most out of both, and to kind of help me sleep at night also, and not have, a bigger drawdown, because price-wise, it might not look like a lot, but if we get to this lower range, it's 30% down from where we are already. So if for people that don't want to see big washouts in their portfolio, hedging could be a good idea. And if we go over also to Ethereum, you can see that it's a little bit more mid-range, while Bitcoin is in like the lower part of its supports, the major support line here. Ethereum is a bit more mid-range, and we've had a big run because of the merge. That's at least my opinion. We had like almost 100% gains here from the lows because of the merge, and it's starting to get a little bit crowded. The merge is planned for September 15th. There are many variables that could go wrong. We don't know if it's going to happen on time or there will be any technical issues or whatever. But even if everything goes well, I still think we might see selling pressure after that. And how I'm planning to do this, how I'm planning to play this, since this range here is, I would say, no man's land. Like we have the moving average in here. We have resistance at around 1700, which was significant resistance in the past. And then we have support around 1400, which is the previous all-time high also from the previous cycle, as you can see here. So the plan here is for me to wait and see how this price action will develop around the merge and before that. And if we get to this area right here, which I think is a confluence area with this resistance around 2K, it's a round emotional number. You can see this trend line here of resistance on the bear side, also in this area. And then the 200-day moving average is coming down to these levels too. So definitely if this scenario plays out and we get a bit more bullish momentum just before the merge, my plan is to try to short here on test of support, of resistance, and then ride the shorts to the downside. If we don't get this playing out, and if we see weakness and already the merge is priced in, if we see something like this and a breakdown of this area, I could take again a short position, and this primarily will be the same philosophy as my Bitcoin. So I do have Ethereum for the long run, and my plan is here to hedge my existing portfolio, or at least partially hedge my Ethereum. I don't want to go net bearish, net short, but that's just my style. You know, there are people that just sell everything in the before the bear market and then just play with the shorts. That's fine. In my experience and with the time that I have in my hands to trade actively, that's not something that I would prefer doing. So this is the way that I'm looking at the merge and how I'm planning to play it. Of course, if you have any questions about the merge or anything else, make sure you post them on chat. We're going to cover now so we covered the merge. I want to show you also this short setup with Vulcan Forge, which is not a typical short. And in general, I'm not the greatest shorter on the market. I've mentioned this before, that I'm not in huge favor of shorting. There are many people that make money with it. It's just not my style. But I decided to slowly start getting into it a bit more, to put more attention on it, because I do think it's a powerful tool, as you can see, for hedging or also for making profits in the bear market. And basically this trade on Vulcan Forge was kind of like a test for me to test out the strategy in a setup that I was looking at the moment. And I'm just going to walk you shortly through it and let you know what my thoughts are. So pretty much you can see we had a massive sell-off on Vulcan Forge, and it's been already in kind of an accumulation range right here. So if we zoom back in, it's been up and down through this range, and it's kind of established, I would say, $3.50 as quite a lot of resistance in the past since July. So as you can see, we broke above it right here. Let me just zoom in a little bit. We broke this resistance level around here. Then we chopped around something around here, and then we broke back below this support of, in this case, of 350. And then we had a massive candle to the upside, which was around 11%. And this is where I decided to open the short. Why was that? We obviously had a lot of bearish momentum on the market. It was a big green candle, and it was right into resistance. So I was like, okay, this is a resistance play, and I want to just open a short here and test this play that it's going to reverse here. So it will bounce off resistance and go down because we're still in a downtrend, and I still think that there is a reason, more than one reason, for Vulcan Forge to continue to the downside, especially with the downside pressure of the of the generally the gaming sector with altcoins. So I was looking at this. I opened the short. It started working well immediately, I would say. And the next day, we had a big red candle. But then, since these things are quite volatile, you can see it had a really big pop and then it flopped. My stop loss is still mental, so I haven't really had a hard stop loss. I will probably have one. I will probably put one in place today or tomorrow, depending on the price action. So I didn't get stopped out right here. I'm still in the position. And I just want to see how it will play out. This, for me, as I mentioned, is really a test play for this type of scenario, for this type of setup. Right now is not playing well. And if we go down to the 4-hour chart, you'll be able to see that we kind of have higher lows here. Let me just show you. But again, it's very choppy. It's very hard to kind of see where the market will go just because of all the levels of support and resistance that are in this area. But I'm just being patient because we can also look at this as a wedge. And if this plays out to the upside, then, I'll take the loss and that's fine. If we go to the downside though, I'll keep the short and probably close it at a little bit of a gain, because to be honest, I'm not really feeling that comfortable holding this for a long time. If we have a capitulation and in the long term, I'm pretty sure that Vulcan Forge will go down with the market. But I don't want to be in this trade for too long, especially when it was just a test for me. I did take a smaller position also with a very similar setup on SNX, and let me just show you. I didn't alert the community about this one because it was really just a smaller one and in exactly the same setup like Vulcan Forged. As you can see here, exactly the same thing. So we had this area established as some kind of accumulation, not really very clear, but we had up and down, and we had a massive candle into resistance, which was, I would say, year-long resistance around $3.50, actually the same amount of money as Vulcan Forge. And we had this really big candle to test out this resistance level. It was 17-20% up on the day. And I did exactly the same. I bought some small positions here. And as you can see, this one is playing out much better. But again, you don't know how these things will play out. And I'll probably just journal on those two setups. If I do a video about it, obviously, I'm going to let you know. But definitely a learning experience for me, because although I feel comfortable with the strategies that I generally use, I always try to improve myself, and I try to kind of have new setups and new strategies to add to my toolbox. And this is one of them that I'm testing, like with shorting in general and just general plays that you're going to see in the future when I decide to take some kind of setups. So this was Vulcan Forged, and I wanted to go over also a couple of more things. Let me just check if there's some questions. Yeah, I see some questions coming in. Great. If you have more questions, make sure to post them. I'll go over them in just a minute. So one thing that bear markets are great for is finding new projects. And when we find new projects, what do I mean? I really like things that are fresh out of the oven, I would say. So if we take GMT as an example, this came out to the market quite late. I'm not sure this is the complete full chart. So there might be some price history here. But as you can see, this token launched pretty much this year. So towards the end of the bull cycle and right in the depths of the bear market. However, it still had a kind of a parabolic run because there was a lot of noise about these active apps that pay you to run or whatever. And as you can see here, we had around almost 4,000% gains from this low right here. So this is, I would say, it had a full cycle, but very quickly in the span of a month or so. So this one is kind of a new token, and it's kind of establishing here some kind of a range. But we still have price history that could cause a lot of selling pressure in a potential secondary bull run. So all the people that bought somewhere around here are big time in the red. So on average, they're like 80% down. So if price starts reversing here, and we start seeing, you know, some accumulation and then a breakout, all of these people will try to get out of this trade. And this is not really my favorite type of setup. Where you can make, I would say, the most money in a bull market is where you have fresh, brand new tokens on the market, and you don't have this kind of back holders on the backside of the trend. This has played out many times, especially in the last cycle. Yeah, there are some old good projects that still pump, or random projects like Dogecoin had a massive pump because of Elon. But generally speaking, the better risk to reward is with projects that just launched. And let me just give you just a couple of examples. So for example, Sol launched, as you can see, before the last bull cycle. It had some kind of a run up. It wasn't a huge one, so no parabolic candles from here to here, although percentage-wise was like 600%. But as you can see, there was an accumulation phase right here. So this is a very beautiful chart. You know, just I get excited when I see stuff like this. So if you're able to catch this, or potentially catch the second leg, so I would say this one too is kind of a nice accumulation pattern. Not a perfect one, but still, this is where I started entering Solana. And as you can see, buying it at $5 when it went to 200 or so, it's a completely different animal. You know, the gains that you can get in such kind of environments are insane. Another one is Dot. Dot had exactly the same pattern. So here you can see, let me just clean up a little bit. You can see here the accumulation. There weren't that many back holders. Price action was looking stable. And then on the breakout, somewhere around here, we started seeing, you know, these parabolic candles. And this tends to play out with many tokens. Just go over, like if you go over, say, AVAX, Atom, Near, you know, all of the tokens that were really hyped in the last bull cycle, you know what I mean. So this is the type of token that I want to be looking at. And I shared like a picture of different tokens that were in the ICO round. So they're still looking for investors. But at some point, these tokens will get listed to exchanges, and this is where I want to start monitoring them. One project that I'm looking at currently, and I just wanted to show you an example of what the price action could look like real time, is GMX. It's a decentralized exchange. It's getting quite a lot of popularity with OGs in crypto. And as you can see here, this price action is really what I'm looking for. So you can see that here we have a range. I mean, why is this not working? Okay, there it is. So we are starting to establish a range here. And right now, if you're following this, oh, come on. If you're following this development of this token, anyway, I have a problem with the drawing tool, but anyway, if we start seeing this developing more and more as an accumulation range, that could be definitely a nice play for the next bull run. And you don't have to go over, you know, every single exchange every time. What you can do is use this very useful website, which is called cryptocurrencyalerting.com, and you can have here different type of alerts, but also you have one for listings. So coin listing alert. So you choose your exchange, you choose how you want to receive emails. And if you just put it to any coin, you know, you can set an alert and see where these tokens are getting listed. And if you have done the fundamental work behind this in this time, and then it gets listed to several exchanges, you know, this is where you can start seeing the accumulation ranges forming, and, you know, pick up the winners. So that's one thing that I just really wanted to share with you. Let me just quickly go over your questions. How to trade short on Bitcoin? That's I don't think we will have enough time. If you look at my older videos, I discussed this specifically, and I also have a video on shorting. So I would say go over them first, and then if you have additional questions, feel free to reach out and chat. You're also in the bearish camp. That's good. Coach, what are the best platforms to short crypto without KYC? I'm not sure, to be honest. I'm not really a big fan of Bybit and all of those smaller exchanges. I know KuCoin was offering this option also without KYC. I'm not sure. I think they updated it from this year, and you need to KYC. So yeah, you might try Bybit. I know it's quite popular with degenerate traders. What do you think of the new play to earn project? What it's called? Let me just open it here. Dodge Dash. So let me just look for the charts. I'm guessing it won't be very popular. Dash. Dodge Dash. There it is. Coin market cap. Well, this, as you can see, we just discussed this. It had a parabolic run already, although it seems new. Not that new actually, from October 2001 to 2021. From here to here, we had like 20,000% gains. So definitely this is in the bucket of I'm not going to touch it. Just by the chart, even if it's the greatest project of all time, looking at this chart, it just really doesn't give me a lot of trust. Shilling a shitcoin in our Zoom chat. Okay. Yeah. What can I say? I'm not saying this is a shilling, he could be just interested, but yeah, definitely. Not a great example here of this token. So let me know, guys, if you have any other questions, or we might end it up here. I'll just wait for a second or two if you have any additional questions. And yeah, really important in these bear markets are, two things. First of all, keep improving. So learn from your mistakes in the past, acquire new skills in trading, play out your mental game. It could be really tough sometimes, especially in the bear market. And then the second thing is be patient. Don't get detached from the market. I see this everywhere, like pretty much in the community or in conversations or on social media. Not that many people are talking about crypto anymore. And that is mainly because we are not in the bull market and there are no 100x's around the corner. And my grandma is not that interested into Bitcoin when the news is not talking about it. This is the best moment, I would say, to really look at the charts every day. Try to find good setups, try to do your research for long-term holds or for accumulation plays that we just discussed. Start DCAing into Bitcoin and Ethereum potentially. Really, really, this is where you can make life-changing amount of money if you take the right steps. Of course, I'm not a financial advisor, but these are the strategies that I've used in the past, have worked very well for me. And even Warren Buffett says this, that you need to buy when there's blood on the street. So it's not me that I'm saying something new here, but it's really hard when it comes into practice, and when you have suffered some losses, maybe from your past, maybe you're still in some shit coins that are down like, I don't know, 80-90% from all-time highs. It's really hard to still be engaged and not feel the emotional pain, but that's the best thing that you can do in these market conditions. Cool. I'm not seeing any other questions coming in, guys. So that will be all for today. Thank you for joining me. And of course, if you have any additional questions, you know how to find me. See ya.